Thank you, Thomas, for this perfect introduction on this topic. So yes, I'm Jérôme, Vice President of the association, also working for Adnovum, a Zurich-based Swiss engineering and cybersecurity company working mostly on banking and fintech. So I will now, welcome all my panelists. Please have a seat. No. Just skip this one for. Okay. Okay, everybody here. So
special to sit here.
Excellent. So now we have 45 minutes until lunch break. Almost full room today on this topic. And I want to start with something, Ilya. I don't know if you remember, a long time ago when I was quite new into crypto, you gave me a simple explanation of the custody of crypto, because it could be complicated to some part for some people. And I have this example. So this is my wallet, and inside my wallet I have bills, which could be seen as a self-custody. So I own the asset, but I also have all the pressure to secure it. If I lose it, then of course I won't be able to recover it. And this is clearly a custodial wallet where I don't directly own it. I rely on a third party, here a bank. If I lose the card, then they can re-emit the card. So in the crypto world, it's almost the same. We have these two options from the start between self-custody or going via a custodial. So let's deep dive into this topic. Could be quite broad. We have 45 minutes. Let's start with an intro. Maybe let's start from this part, Joaquin. Can you introduce yourself and tell us a bit more about BitGo?
Sure. So first of all, thank you for having me here. Great conference. So my name is Joaquin Sastre. I run BitGo in EMEA and Latin America. BitGo is one of the largest regulated custodians, one of the largest wallet infrastructure platforms. We custody around 60 billion USDs in crypto assets. We process around 20% of Bitcoin transactions on-chain daily, so 20% of the entire on-chain Bitcoin volume. And we also have different financial services like a large settlement network where you can settle crypto and fiat inside a regulated and secure environment.
Thank you. Erina?
Hi, everyone. My name is Erina Penkovsky. I am head of partnership at Allnodes. We're an institutional and retail staking provider, obviously non-custodial. We operate worldwide. We have around 2.4 billion under management at the moment. We operate almost 40,000 nodes on 71 protocols, and we just keep on growing.
Excellent. Richard?
So I'm Richard Astle. I lead the Swiss market for Fireblocks. I'm also head of the financial institutions business across EMEA. So Fireblocks, we are a technology company. We have about 1,800 B2B clients, or B2B2C clients in terms of some of them. We provide them with a wallet infrastructure, so it's a direct custody platform. Each of one of our clients are custodians of their assets. And then on top of that, we have this asset settlement network. It kind of gets incorrectly compared to SWIFT for digital assets, but essentially it allows the transfer of digital assets without giving up a deposit address, which has been one of the quite limitations of scaling blockchain transactions. And that particular piece has been able to secure over $4 trillion of asset transferred over the past 4 years. And we serve just about every single type of digital asset use cases. So exchanges, brokers, banks, as well as gaming companies, and also consumer brand space as well.
Thanks, Ilya.
Yeah, thank you. Hello, everyone. I have here two hats. So one hat, I'm a board member of CVA, together with Jérôme and other board members. And my second hat, I'm CEO of YouHodler. And thank you, Jérôme, for this reminder about this example with wallet, because this is exactly what we're trying to build with YouHodler. So basically, we are building this kind of wallet where we are trying to combine custodial and non-custodial approach to secure your assets. We're trying to combine crypto and fiat. You can easily convert from one to another. And we're also trying to combine trading and, let's say, payments. So we are a retail-focused fintech company with multiple crypto-to-fiat services and multiple ways how we can manage assets, custodial and non-custodial way.
Thank you. And last, Zarah, a quick intro. And also, I have to ask you the question that all the journalists asking me since yesterday about this recent Ripple acquisition. I don't know if it's the right word, but yeah, that's the big news. It happens 2 weeks ago. So a few words on that to start.
Sure. It's the right word. It's not a merger. But quickly about myself. So I'm Zarah. I work for Metaco. I'm responsible for the Swiss market and the Liechtensteiner market. Metaco is a custody tech provider, so it's a technology company. We are operating globally, but we are located here in Lausanne, so the headquarters is in Lausanne. Well, I mean, yes, we are mainly focused on regulated institutions. So this is our main target market, and this is also how we build our solution. So our features are very well fit for what regulated larger institutions like Tier 1 banks need. Our clients are mostly Tier 1 banks, or a lot of them. And now, well, about the Ripple takeover, it was also quite a surprise for me, to be honest, but we are extremely excited. We just saw that the visions are very much aligned. So the vision of Metaco, and I believe also of Ripple, is to make the global financial industry and the global financial processes more efficient and more secure. And I believe this is, for this, blockchains or distributed ledgers are extremely capable. And I think to reach this joint vision, this acquisition is quite powerful. Also, of course, we don't really have any liquidity problems in the future. That risk is solved for sure. I mean, it was never a problem, but with smaller companies, it's always a problem, or it can be a problem. And I think this is extremely exciting, and I'm very happy to be at Metaco at this time.
Let's applause to Metaco.
Yeah, a 250 million deal with the current market situation for a Swiss-based company. It's something very important for the community. So we'll be happy to welcome Ripple, your new colleague, in the next Crypto Valley conference next year.
Yeah, I hope so. We already talked about sponsoring the boat party.
Okay, I save you one sponsor for next year. So okay, so let's start. So we will try to during this panel to talk a bit about the recent past, the current situation, and the hurdles we have to face, and the future. Recent past, of course, 2022. I don't have to remind you what happened. This disaster, what happened in our space, the domino effect. The crypto collapse, Celsius, BlockFi, FTX. So I remember in November last year, just after FTX, or December, we organized an event at Crypto Valley around self-custody, because everybody was freaking out and say, okay, now we all have to go self-custody after what we experienced. So yeah, my first question is just simple. Can we still trust a centralized exchange today? Let's start with you, maybe, Ilya.
Can we trust banks? So I think actually crypto is not unique. We should not just separate crypto and boil it in one single pot, right? Because we can speak about entire financial industry. So we got this issue with Credit Suisse, and it's really similar to cases what happened with FTX. So of course, like maybe they're different, we know, but they have a lot of similarities, and it's all related to mismanagement of funds, misuse of funds. And doesn't matter we speak about crypto or we speak about fiat or we speak about, I don't know, stocks, commodities, whatever, securities, right? So similar nature. And that's good that we have now all these discussions, because technology allows us to fix these problems, right? And I believe we have here a lot of experts to discuss how exactly technology can help us to solve and avoid this kind of cases in the future, like Celsius, like FTX, and like even Credit Suisse. Mm.
And maybe Richard, after this drama last year, did you feel an upsurge in terms of needs? Did you felt a change? And is it still lasting, or it was just a fear and now we're back to normal?
I mean, from the outset, we've been a direct custody platform. So we've always felt that sort of self-custody was going to be the way to go. And at least on the institutional market, being able to custody assets yourselves rather than relying on a third party, of course, it's got added, a lot of benefits from centralizing counterparty risk on globally systemic banks, for example. We always see interest. I think also, from what I understand from my peers as well, is that they're seeing it. That's a flight to quality. I think depending on which angle you're looking at centralized exchanges from, if you're a retail client, it's different to an institution. Institution, you're a fiduciary. You're representing individuals at the back end. There's always been barriers to entry for centralized exchanges. You kind of think, if the institution gets burned, they should be able to afford it. Retail, it's like it's a lot different. What you don't want to see is retail getting run over. And I think that's what likes of FTX have really highlighted. So I think there's definitely been a flight off exchange into self-custody hardware wallets, which of course introduces new risks on an individual securing a private key, for example. So I think that will change over time, and it will change at the exchange level. I think the exchanges will become more adequately regulated, because let's face it, I'm a client of many different exchanges. It's a great user experience. What I don't want to do is get run over from bad practice, but I think if they shift their models on the retail side to become adequately regulated in quality jurisdictions, that will encourage clients to come back and potentially trust them as custodians as well. On the institutional side, it's shifted for a long time. I think, since 2018, we've seen the volumes from institutions, and real institutions, not hedge funds who can take that risk. We're seeing those that have been using more the OTC market, regulated broker-dealers who they can face. So I think if the exchanges want to play in that space, they're going to have to adopt new models, not just regulation, but also segregating their custody business, from their marketplace, because essentially they are brokers with a central limit order book. And also, some are also operating hybrid custody. So I think Thomas touched on that before, and I think that's definitely a trend that we're going to be, we're going to continue to see. And folks like BitGo, we've got Copper and Clearloop, they're building these types of solutions to support better market infrastructure, so you can protect the institutional side as well.
Yeah.
Thanks. So I'm interested to get your point of view for the BitGo, because you're on the both sides. Huh? You propose self-custody, you're regulated custodian also.
Right. Yes, we are the only company that actually has both worlds, the regulated custody, where we have regulated entities in different jurisdictions, the US, Germany, Switzerland. We're opening in Dubai, another one in Singapore. I'll touch on that in a second in terms of what is the difference, or maybe we're going to touch in our conversation around that. And then we also offer the more software wallet infrastructure, where if the client wants to do their own custody, either if it's an exchange, an asset manager, whatever company or institution, we can offer that service. I think the main question we should ask, and Thomas was totally right around market structure, right? We're not inventing here the wheel. This is not rocket science. So investors' protection is already invented. Market structure in traditional finance is already invented. We don't think that everything that has been invented in traditional finance is the evil. Okay, there's some things that have worked to protect investors. Didn't work with Madoff because literally they didn't check their custodian number, right? This is ultimately the last check that the SEC had to do, and they didn't do it. So in that regard, I think we should ask ourselves two main questions. One of them is, what happens if something goes wrong? And the worst thing that can happen in the world we understand and we know is bankruptcies or internal bad actors, right? So if we ask ourselves what happens in that case and how we can resolve it, it's really about, are your assets or your client's assets, when you're a typical broker or an exchange, part of your balance sheet, and is the entire thing going down, your client's assets included, or are those assets separated, actually protected, and audited 24/7 in order for someone to be able to give it out? And then we can get into questions like, okay, what is the process to give that out if there's a bankruptcy? In the case of FTX's derivatives platform, LedgerX, they were forced to use a qualified custodian in the US, which was BitGo. What happened with the assets of LedgerX's users? They're all there. No one lost a penny. What happened with the others? We don't know. By the way, we're trying to resolve that problem too, in addition to Mt. Gox, et cetera, et cetera. So ultimately, I think that's the main question we should ask ourselves. It's not, so regulation is not all the same. It's not figured out everywhere, not even here in Switzerland, like because there is not a jurisprudence, there's not a history of bankruptcy in a regulated environment of regulated digital asset custody and bankruptcy. So for now, for example, it's very difficult to get top-tier legal firms to get legal opinions about what will happen and all this stuff, but we'll get there. It's part of the, you know, it's part of evolving the industry. So yeah, I think that just to wrap it up, that question about what happens if something really goes bad, and again, that really goes bad, it's mostly a bankruptcy or a bad actor like SPF, is the main question we all need to address, right? Regardless, you do tech provision and you leave your client to decide where they want to be regulated or not, or if you give really sub-custody regulated services.
Maybe I add another question to you on regulation, because of course it's always a big topic in crypto. Does this regulation really protect the customer? And is there any regulation that are better than some other? In which country are you regulated? Or?
Right, that's a good question. So in the case of BitGo, we are regulated as a qualified custodian, which is a US-centric concept, by the way, but we tend to use it kind of everywhere. So we're regulated in New York and in South Dakota. So both of those regulations, and answering to your question, are, you know, were our clients more protected and are our regulations the same? Well, no, okay? Saying the word regulated is not like, okay, I cover 360 degrees and everything is fine if I'm regulated. Well, no, this is the reality, right? The US regulation state by state differs. The OCC opened a process to give digital asset qualified custody licenses. They let Anchorage enter, and then they changed the precedent and closed the entire application process, and now they don't want to regulate Anchorage. So this is also like a politic thing going on here. And then in our case, we're regulated here in Switzerland through VQF, so we're a regulated organization. And in Germany through BaFin. So quickly answering to your question, I know it's not a super exciting concept, regulation and client protection, but it's important. For example, in the case of the German regulation, if you look at it, there is actually fiduciary responsibility of the custodian. That basically means that if there's a bankruptcy of the custodian or of the broker in the middle, that is facing the retail clients, there's actually a process already established, so the regulator can come in, take over, put a person in charge, like there's been with FTX in the US, and make sure that the clients receive their assets in less time in a established process. Not all regulations are the same. Switzerland doesn't have that. In the case of New York State and South Dakota, they do. In the UAE, only ADGM does that. So those are like small bits and pieces which are important to take into account. So in my opinion, right now, Germany and BaFin are the most stringent ones and the most protective ones. Does that mean that they favor business? Well, it's a balance, right? It's a balance. So yeah, not all regulation is the same. Yeah, in my opinion, some states in the US have done it right, given the fiduciary responsibility. Germany is doing it right, other jurisdictions in Europe. But for example, MiCA doesn't establish this around custody. It just establishes regulation around segregation of assets, but not about what happens if there's a bankruptcy and what is the process, right? So that's why we're talking about MiCA 2.0 already.
Okay, so then thank you for that. Don't spend too much time on regulation. Let's switch to staking. Erina, you are staking expert here. Tell us what different the choice of custody solution is for when your clients go into staking. Is it really possible to do self-custody for staking? What's the trend you're seeing and also the difference between just holding crypto and staking crypto in terms of custody?
Lots of questions there.
Yeah, pick the one you want.
Let's start with that Allnodes is a non-custodial platform, and Allnodes specifically works with retail clients and institutional clients. So what that means is, If you're a retail staker like yourself and you have a hot wallet or a cold wallet, you can stake via Allnodes. And that means, again, the private keys stay with you. And you can choose as well if you want to stake with Allnodes or stake with someone else. You choose your provider. Second thing is institutional clients. So with institutional clients, we work with asset managers, VCs, hedge funds, and they custody with custodians. And then in that situation, again, the private keys, they're managed in different ways. When it comes to self-custody, you also have the option to home stake. That's a bit of a different monster there. It has its pros and cons. It has its own risks. Home staking means that you are physically running your own nodes and you're not using a validator like Allnodes. Like with home staking, there are different risks and obviously benefits. With self-custody, there's also different risks and benefits. More responsibilities, more education. And I think that right now, with the whole crisis and FTX, it has pushed that education because people are asking questions. If they're asking questions, what are private keys? What are validator keys? What do they do? What do they mean? Where are they stored? And I think that more than ever, we're starting to question how infrastructure works. No one ever asked the infrastructure behind social media or data there. No one really cared. But now when it's about your assets, people are really starting to care and starting to do their research. And I think it's a good thing. And I think the trend that we are seeing right now is that obviously taking your assets off exchanges and making sure that you are managing your risks, whether you're a retail client or an institution. Does that answer everything?
Yeah, good. And now someone in the staking industry suggested me another question. So why so few of the centralized platform clients are staking? It might be a question for you, Richard, if you want to answer. Sorry. Why so few of your clients are staking? Because I don't know if you know the percentage, but it's still low. And why?
I don't know the exact figure, but I imagine it is quite low. Specifically to Fireblocks, I think there's probably two main reasons. One being that the majority of our early clients, at least, are in the brokerage and the market making side. So generally, they are moving assets around a lot, which makes staking quite difficult if you're locking them in staking contracts. I think the second reason is probably actually a platform restriction, in that it's only in this year that we've produced a UI for staking through the Fireblocks system, because part of the Fireblocks piece is that it's not just securing private keys, and custody is way more than that, as we've touched upon, I think, already. But it's so you can put governance around the movement of funds or the commitment of funds. So having that governance process built into the UI and into the policy, I think that's probably been a bit where we haven't covered it as much because our clients haven't necessarily been demanding it so much. Having said that, I think over the past sort of 2 years, our highest growth client base has come from sort of the traditional regulated financial institutions market, where if you're sat in middle office, not a chance in hell are you going to run a script to stake assets. So you do need that UI support, and that's of course been brought into the product roadmap and then delivered. So going through the motions of introducing assets that go by demand, so ETH2 being the predominant asset request for supporting. So I think that is going to grow. It's important as well, particularly fiduciaries. If you're custodying assets on behalf of clients, it's asset services essentially. So they're borderline deflationary if you don't. So it is a fiduciary duty to actually be able to offer staking, and certainly on the non-custodial side is where we are focused in terms of partner growth. We're not going to do staking ourselves. But it needs to be non-custodial because there's two risks. You've got custody risk if it's a custodial staking platform, and then you've also got the risk of the staking provider itself, because any errors on the staking side, if you're not available to validate blocks, are at risk of the loss of assets. And I think again, platforms like Allnodes and others out there are solving that issue on the non-custodial staking side, and that's all our interest is. Likewise for our clients as well.
Yeah.
All right, so now let's go more into technology a bit, because when it comes to B2B custody, I always feel there is kind of two religions. There is the HSM, which come from hardware security module, versus MPC, multi-party computing. And it seems these two religions just can't talk to each other. Maybe it would be a question for...
Yes, they can.
Yeah?
Yes,
they can? Okay.
of course.
How can they talk to each other?
Yes, they can. So, I mean, You're right. There are pros and cons for both concepts. So MPC is software-based, HSM is hardware-based. HSMs have been around for ages. And I mean, there are also algorithms, MPC algorithms, where you still use an HSMs, that how you talk or how they talk to each other or how they can talk to each other. I think this is it's super interesting to talk about how you store the keys. And this is one piece of custody. And I don't know, it was, I think, a presentation yesterday from one of the guys of the custody team. They said there are three main blocks in custody. So one of them is how you store the keys. One of them is how you access the ledgers, because you also need to have this connection to all the ledgers or to the ones that you want to support. And then you have the governance framework. And yes, MPC, HSM, this is how you store the keys. There you can debate. There are pros and cons. As I said, I think both solutions are extremely secure. I think the problem, and this is also, we are all talking about security and so on, but in general, it's all about trust. And how do you establish trust? So yes, maybe retail clients or institutional clients look deeper now into technology, but still, like, the common trust is established through what is the opportunity and what is my neighbor doing. So maybe also answering your first question about why or can we trust a centralized exchange? I mean, there was not really another option. Your bank wasn't offering it. The trustworthy companies that you trust, they were not offering it. So there were the centralized exchanges offering it, the new ones, right? So you did it because your neighbor did it and everyone did it, so you did it too. But you didn't really do the research. And I think all those bad happenings in the recent few months actually also are a good sign, because we need to learn. It's an innovative industry, and innovation always goes with failure. And this is how we learn, and this is how the industry learns. And I think it's not too late to adapt the good concepts now. It's not too late to adapt regulation. And also regulation, they have a very hard job. I mean, they want to put regulation in place about the risk that is not really sure what the risk actually is. So I think talking about, again, HSM, MPC, well, yes, this is for sure something that can give you trust. But also, I think the policy layer is the most important one now, because now you need to look at, okay, we have learnings from the industry, the regulator is learning, the partners are learning, a lot of competence centers in your company are learning, the compliance center, the risk center, and now you have a lot of rules you need to implement in your custody solution. For that, you need an extremely capable governance layer and a policy engine. And this policy engine, this governance layer, needs to understand and include the context of everything that is going on around. So information from AML providers, information from KYC providers, and so on and so on. So now it starts to build like this process map around custody. And I think this is much more important right now, or should be the most important topic right now to talk about than what is better, MPC or HSM. Because in our solution, our clients can select what they want. They can take HSM or they can take HSM now from a provider like IBM. They have like the highest security level, or they can maybe move to another one the next year, or they can move to MPC. But what we need to talk about are the processes.
Okay, thanks. Ilya, I want to hear from you on that topic, because you're not a software vendor, you're not a solution provider, you are a client, and I know you use both, or you will use soon both. So can you tell us the advantage of maybe having both?
I think the key is in usability and in simplicity of actually user interfaces. Similar to we spoke about staking and how we can increase adoption of staking. I think we should look into the market as a whole, not just isolated crypto. So we will get much more customers using real staking if we will look at interest rates provided from traditional markets. So why would you invest in staking if you could get like 5% annual from treasury bonds, or even more from S&P 500 or whatever? So the same with, you're asking about MPC versus HSM. It doesn't matter. So what if someone dies? right? We need to use some inheritance procedures similar to traditional markets, right? So, and it doesn't matter whether it's MPC or something else. If someone cannot access funds just because someone lost keys or something really bad happened, right? So that's why I think the key is in the development of really easy to use interfaces, easy to use ways to manage your funds. And again, we should look at the market as a whole, and we should learn from traditional market. So, and yes, we're trying to combine different technologies. We're trying to combine both sides, like crypto and fiat. And speaking about technologies behind, yes, we're like a customer to many of custody providers like Fireblocks or Ledger or some others, because we're trying to like aggregate everything at our backend and then provide our users with easy to use interfaces. So, and again, my point is very simple. As soon as it will be complicated for typical normal, common, regular person, it will not be adopted. So we should focus on this side, on the front-end side.
Mm-hmm. Yes. Just maybe a note to that. I think this is a very good concept because we are building an environment around a solution. It cannot be just one solution. I think this diversification of risk is extremely important. Yep. And for example, in our solution, we are also kind of like an orchestration layer to include all different kinds of, if you want to like have MPC or HSMs next to each other or hot and cold next to each other, or even integrate different kinds of sub-custodians and orchestrate them side by side. Yep. This should be technologically seen possible, and that I believe this it will be more and more crucial in the future.
Yeah, and one quick comment. Actually, yesterday, you remember we had a quick discussion, and you said very important thing. You said like many people even cannot take care of themselves, right? Many people everywhere would like someone to take care of them. So that means that we should develop technology in a way to help them to take care of themselves, right? And if we'll have like a complicated things for, again, common humans, it will not gonna fly, right?
Yeah, exactly. Yeah, I believe, I mean, this whole, if we look at it at a higher level, the whole, I would say, maybe I can call it blockchain revolution, it's about that when digitization kicked in 50 years ago and money became digital, the power was so much allocated to banks and big companies. And I think now, and also the title of this panel is, can it coexist, self-custody and centralized custody? I believe, yes, it has to be the way that it coexists, because 50 years ago, when we had physical assets, we could also choose, do we want to store them in our house, or do I want to hold my cash, or do I want to store it with the bank, or do I want to give it to one else to do custody? I think this availability of being able to choose is extremely important. This is where we are heading. And this is taking away the power from the big banks and the big companies of this world. Because it's also prone to failure if you just trust them and then they're not trustworthy anymore. What are you going to do then? So this selection should be there.
If I can add a very quick thing, I think ultimately so now there's this race between HSM and MPC and different versions. We have TSS, Threshold Sign-In Scheme, which is like a combination of those things. Ultimately, this is a matter of time where everything will be standardized, not in one solution, but in 4 or 5 standards probably, or 3. The same way, IPv6 won in the internet, HTTPS has won in security browsing. This will be converted into standards. Audit firms, which we already have, and yesterday we're talking in the custody panel upstairs, will be auditing 3 or 4 standards. So this will be, normalized at some point. But this is definitely a very exciting moment because we are actually proving those technologies and seeing which one is gonna win. We don't think in terms of BitGo, we don't think we have to be stuck to one, so we're pretty agnostic, and we are spending a lot of money in trying to hack every single one of those setups to see what wins. So
Yeah, and this needs to be done in collaboration.
Yep. Right.
For this, we need to exchange to build those standards, but this needs to be done in working groups, and that is clear. But I also believe now it's really a race about the business models, and I think now, I mean, you asked why the clients are not staking. Well, our clients are mostly big banks like Citi, BNP, BBVA. They're just getting in there. They're just starting to explore their use cases. I mean, they're starting to offer maybe Bitcoin and Ethereum. And now they're learning quite fast, but still they need to have all the processes in place because they have compliance departments, risks departments, all that. So it's taking a bit slower, but eventually they will get there. They also want to look into staking, and I already get those requests. But now it's like, well, the big players are starting to offering the same as centralized digital exchanges. Well, who is going to win the game? Is it going to be the trustworthy bank, or are they even trustworthy? Or are the tech providers now trustworthy? Because what we see is also, I mean, we trust in Alipay, we trust in Apple Pay. It's also not a bank. So where's the trust allocated in the future? That's an interesting question.
I think to add to that, it's also about history, right? I mean, looking at the banking industry and money, it's existed for hundreds of years, and we're still learning to trust it, and new technology is still developing, as you said, Apple Pay and so on. I mean, looking at a normal example, my grandma still doesn't use a credit card. She's afraid of it. So same thing here, right? If the crypto industry is so young and it's about 10 years, I mean, we're just at the beginning, and so we're still learning as we're going, and the trust is developing, and we're developing new technologies, and we're trying to kind of, it's a race to the finish line, but where is the finish line? Is there a finish line? Because regulations in the TradFi industry are still developing, and, something is always changing and being added on. So I think just also looking back at history to see what we can expect from the future.
So I think we almost responded to the question, yes, it can coexist, but now is it I want to discuss about the possibility of having a hybrid custody solution, because over the last few months I've met quite a lot of crypto startups and also crypto banks, and they told me that some of their clients are requesting NFT and DeFi service, and obviously they just can't serve them with their centralized custody solution that they have. At the same time, they don't want to let their clients alone with self-custody. And I heard that some new development around kind of hybrid, let's call it like this, of clients having a self-custody, but with kind of a safety net by a third party. What is that? Is it real? Is it a trend? I think, Richard, we talked about that briefly.
Yeah, I think Coinbase have touched on this with their retail wallets. It's something we've seen from client demands in terms of consumer brands who are terrified of being labeled the term custodian. And I think the consumer brand segment has probably been the most notable over the past year or so with issuing NFTs, whether it's sort of your Nike shoes or your Tiffany pendants. But I think one of the issues, it's actually the opposite, where we advocate for more centralized custody, because for those brands, these are more marketing initiatives. And if they are creating an NFT and distributing it to, 1,000 unknown wallets, like some of those wallets might be lost, that NFT might never do anything. It's like, are you actually achieving anything for this budget that you're throwing out, or are you just trying to sell something for 50 grand and make a quick buck off of it? And I don't think it's that. So this is where we've been more advocating with clients, say, actually, you want to take a sort of centralized custody approach and think about non-custodial wallets, so you can easily provide sort of a web3 wallet experience to your end client, but without sort of also burdening them with this sort of like governance policy over it, recovery and seed phrase, protection, but equally don't concentrate that on yourself. And these are those hybrid solutions. So you have a non-custodial wallet where you can basically provision for a retail customer. They own it, they control it, they are sort of the authority over it, but they're not sort of burdened with those processes. They can do key recovery together with a trusted third party. And I think that's what Ledger were trying to achieve. They completely ballsed up the PR, but I think that generally that's what they were trying to make it. How do I get users to use me more and trust it? Because it is about trust in that sense. And then for some consumer brands, if you actually do have some sort of ownership and relationship with your end client that you've distributed that NFT, the more likely you can engage with them. And that sort of direct to consumer has been a growing trend, not just in crypto or NFTs, but also in the way that you generally sell into your consumers. Right through COVID, we've seen how business models have shifted. So if you're going into the consumer brand space, you definitely want to be distributing NFTs in a manner which you could then future engage with that end client. And that also might provide a bit of a bridge with, regulated institutions eventually. They're not going to give that up initially, I don't think. But that will also bridge them so their clients can still trust them as that sort of, we'll say the Swiss bank vault to keep the recovery kit and all of that, but also not restrict them from terms of, exploring other areas that the web3 can offer them.
Just maybe a few words. I believe that the hybrid approach is the only right way to get a significant progress. And we really can see that this is exactly happening right now. Because, yes, if you'd like to take full control of your keys, of your custodies, yeah, you can use your cold storage in many different ways, like hardware wallet, different software wallet, etc. But in order to convert one asset into another asset, in order to access traditional assets, you need to use this hybrid approach. Something interesting actually happening here. Yesterday we had some deep discussions with some of guys here, like Tor Wallet, for example. They started from totally DeFi space, and now they're moving to this hybrid approach because their customers asking for credit cards or for IBANs. It's impossible to go fully in decentralized way, providing cards or IBANs, right? So they started from totally non-custodial DeFi part, and they're moving to this hybrid approach. We're doing the same. We started from traditional side with centralized approach, and now we're adding non-custodial wallet into our application. This is hybrid. So if you'd like to get full control over your funds, of course, you have to use non-custodial way, but you need to have a smooth way to access conversion service, lending service, trading service, and all these services should be provided in hybrid mode, and this is totally fine. So, if we'd like to simplify this kind of model, we should follow decentralization model for crypto, segregation model for fiat, but we should always have a hybrid part in order to follow the simplicity of usage and efficiency in terms of pricing, efficiency in terms of overall models and connections to traditional markets. So, yeah, Jérôme, hybrid is a key, I think.
If I may add something, and this is something we're very proud of. We've actually, very quickly, I know we're running out of time, we've actually resolved this exact question for NFTs with Nike. Nike launched their first NFT marketplace, Swoosh, a few months ago. We basically helped them build the wallet infrastructure for the three main use cases. The first one, where Nike would actually have control of the actual NFT, and therefore the client asset custody would be with Nike. We've given the solution an option to be actually custodied by BitGo, so the client has a risk with BitGo. And we've actually figured out, which is the most complicated part, a way in which the actual final owner, the Nike client, owns the private keys, have control over it, and therefore has control of the NFT and can send it wherever they want, regardless if Nike is there or BitGo is there. So ultimately, my point is, this can be solved with technology. It is very complicated, okay? We spent a bunch of money on this and a bunch of great engineers doing this, but it is solvable, and it will be replicated in the next few years for sure. So being agnostic around this is not a problem. It's actually something good, right? So giving this opportunity for the clients to decide, it's good. Your grandmother probably will say, I like Nike or BitGo to have control of the keys. I don't know, my nephew, 15 years old, probably will say, you know what, I want to have control over mine. So
yeah. That's exactly what I was saying before. You have to have this ability to choose. Yeah. Right. And this is giving back the power to the retail clients.
Yeah, that's right.
All right, so I see it's 12 sharp. I asked the timekeeper, Nikki, what do we do? Do we stop, or people are hungry? 5 more minutes if you're not too hungry. I see the hungry people leaving the room already. The one who can stay 5 more minutes.
Just one quick comment, actually. So. Yeah. Right before us, we had an excellent presentation from Signal. You remember this slide about technology, about structure of custody? Yeah. So this is another illustration of hybrid approach. So if you would ask a question, can we trust centralized exchanges or can we trust banks? The answer is yes, if centralized exchanges for banks applying this technology, like Signum presented just half an hour ago.
So just stay in a room. There will be enough food for you. Okay. So my last question is: so we covered custody of cryptocurrency, of staking, NFT, DeFi. Maybe the last one is real-world assets tokenization. This morning, during the very interesting institutional adoption panel, I've heard that from the panelists that most of them are coming into crypto via real-world asset tokenization. So, what impact about the custody choice for them? Do they go fully self-custody? I don't know. Richard, you want to answer this one? Because I know it's a big part of your business this last few months. Huh?
It's probably been one of my main focuses, not less so on the crypto native side, but certainly real world asset tokenization has probably taken all my time these past sort of 6 to 9 months. I think what's interesting about these different sort of solutions is they are a little bit fragmented. So we're solving in some areas you solve for very specific use cases, so then you end up with this sort of fragmentation at the wallet level. Ultimately, you miss the interoperability piece, and I think that's what questions start to come out when particularly regulated institutions come in. Yes, they've got crypto ambitions, but they've also got a much greater ambition around tokenization of real-world assets, and one doesn't necessarily support the other. So that's where some of the limitations have come in. And what we've been doing over the past few months, I think, has been extremely unique, not just in terms of how Tel Aviv Stock Exchange, which was the main FMI that we worked with on this, but how they've approached the term of custody, because they've got this you have this sort of centralized custody background where you think, okay, everything, the whole world will revolve around me because I'm the main FMI in Israel or Switzerland or the US. They've actually taken this sort of decentralized custody approach where, yes, you can leverage their expertise for digital asset custody, but for the project that we were doing with them called Project Eden, it also allowed for direct custody by market participants who were joining this pilot. And what Project Eden is, it was the Ministry of Finance in Israel. They wanted to issue a government bond on chain, and they wanted to do it on a permissioned Ethereum-based blockchain, and for Tel Aviv Stock Exchange to essentially orchestrate all of this. And I think what was very unique about it was not just like the time frame we executed in, which was just under 5 months from start to finish, but it was also an entire ecosystem which took part. And that's the other piece. A lot of these projects that are taking place are very closed. It's one institution doing one thing for them, for their clients. For this to really adopt and be standardized, you need ecosystems to combine. Right? We don't have really custodial settlement in the crypto space, but equally when you're doing tokenization, you want to see UBS issuing a bond and selling it to clients of Deutsche Bank. That's what you want to see. And that's essentially what was happening here. So every single primary dealer of government bonds in Israel took part in this. So it was 8 international banks, Goldman, JP Morgan, Barclays, BNP Paribas, Deutsche Bank, Citi, and 5 local banks as well took part of this pilot. Everybody, it worked like clockwork. Actually executed yesterday, which was amazing. Everyone onboarded to the Fireblocks platform. We worked with one of our close partners on the tokenization side, Blockfold. And this is not just a lab project. This is a full production, ready to scale platform. If they want to issue govies like this in future, they can take that and do so. And I think that's really a big step in the direction that others are looking to take throughout the globe. It's not quite happening in developed markets yet, but certainly we're seeing it in South America, we're seeing it in Australasia, and now we're seeing it coming over towards EMEA as well. So I think there's some exciting things to come, particularly on the tokenization side, and I think the developments which we've covered off on the crypto piece here has also been extremely valuable for adding to this institutional adoption that's been happening over the past few years.
Yeah, I totally agree.
Last words.
Yeah, no,
it's 5.
That was a long word.
It's 5?
Yeah.
It's 5. Last word, if you want
No,
to.
I can't agree more. It has been keeping me busy as well. So I think this is really something that you can also sell to the top management. For example, Dika, they said they're not looking at all into crypto. They're only focusing on tokenization of assets because this is more tangible, more connected to process efficiencies and so on. But yes, you have to do it in collaboration. I mean, we have also projects where banks tokenize some physical assets like art or whatever. And of course, yeah, their clients can trade it among each other. But now we are focusing on, okay, how can we really increase liquidity? How can we work with others? How can they work with others? Where are the marketplaces? And I think this is all coming up quite fast. But it's a new wave of digitization. It's just a new way of putting more assets in a digital form and then on-chain. And because it's all sitting on decentralized ledgers, you can use the same technology for it. I mean, you use a custody technology for digital assets, and if you have a tokenized security or if you have a Bitcoin, it's an on-chain asset.
The last one? Okay, last one. Not too hungry.
Let's continue this interesting discussion during our boat cruise tonight.
Yeah.
Oh, yay.
And
Indeed.
thank you
Sounds like a great idea.
Thank you very much.
Thank you